Big banks reporting Friday. JP Morgan Chase, Citigroup, Wells Fargo, they all delivered solid earnings. A strong showing in profits made it easy to forget the year's earlier chaos. Our next guest says all signs from big banks point to a soft landing. But how will high interest rates weigh on banks, both big and small, in the months ahead? Joining us now is Ben Eisen, Wall Street Journal reporter. Ben, thanks so much for joining us this morning. All right, Ben.
Thanks for having me.
Let's get right into it. Let's talk about these big banks. We had a guest on earlier who talked about the strength that we saw. You put out a report talking about just the picture that the banks are painting. What's the theme that you're seeing play out with regard to the reports that we've seen so far?
So it's important to note that we've only had 3 of the big banks out of 6 that have disclosed their earnings so far. But what we saw on Friday was honestly pretty good as far as what people were expecting. All of the 3 banks, Citigroup, Wells Fargo, and JP Morgan, they all beat estimates on profit and revenue. And when you kind of dug into the details a little bit, what you saw is that the money that they set aside for bad loans is really not that much. Their customers were borrowing, they were spending, and the economy kind of continued to hum along as shown, kind of coursing through these banks. And that's despite some of the worst fears that people had when you think about the economy. We've been talking for years about, are we going to have a soft landing, or are we going to have a hard landing? Are we going to have a deep recession? And it's obviously we don't know what's going to happen, but as far as what the banks are seeing right now, it really hasn't been the kind of hard landing that we've seen. It points more towards a soft one.
And given that we've only had a few of the banks come out so far, Ben, do you expect to continue to hear that, particularly from the regional banks when they start reporting?
I think there will be a distinction between the big banks and the regional banks. What we saw among the big banks is that some of what we saw during the crisis that we had earlier this year, with deposits leaving banks, these regional banks, and those banks having to replace those deposits with higher cost funding. We did see that at the biggest banks to a smaller extent. It impacted them less. They have sort of these more diversified big businesses where they can offset sort of higher deposit costs with other lines of business. Now, when you look at the regional banks, they sort of have less room to maneuver. These are banks that are more focused on taking deposits, making loans, investing in securities. So the higher interest rate, the hit from higher interest rates is going to be more acute at these smaller banks in all likelihood. So that may mean that a lot of these banks had to replace these deposits that left with higher cost funding. And when that happens, that kind of directly hits profit. It narrows the net interest margin that they earn. So I think that's something to be on the lookout for. How bad it will be, it's hard to say. And, all banks are sort of faring differently. But yeah, I don't think anyone expects the mid-sized banks to have as rosy earnings as the big banks have had. And the big banks have actually sort of benefited in some ways from the trouble that we've had with regional banks, because when people took their deposits from SVB, for example, they brought them to JP Morgan and Wells and Bank of America. And so you've had sort of the haves and the have-nots that we've seen over the course of the year.
Ben, speaking of the haves and the have-nots, there's been some divergence, obviously, in share price, and you dig into this. But when we look at kind of this as a basket, you look particularly at the KBW NASDAQ Bank Index, it being down for the year, but that's different from the XLF. What does that tell you, or what does that signal about kind of the state of the banking sector?
You definitely do see this kind of divergence that's playing out between the biggest banks and the regional banks. It's playing out in their share prices. JP Morgan, Wells Fargo, Citigroup, the ones that reported on Friday, those stocks are all up for the year. But when you look at the PacWest and Zions and Comerica and all of these banks that are in the regional space and have been just kind of battered all year long, they don't look so good. So there is sort of this pretty wide divergence that we're seeing.